Good morning to all traders and welcome to this market insights video on January 5th. We saw investors pocketing some profits yesterday on the first day of the new year. In my opinion, just ahead of the Georgia runoff election, as also risk moved to emerging markets currencies. Now, you probably read or hear headlines that is because of COVID, the new strain, or it is because stricter lockdowns have been discussed, with one actually taking effect this few hours back in the UK. But these headlines have been on the media for a while before we started the new year. So, in my opinion, it's just a simple take profit before the election results are being published. Now, dollar as a safe haven, of course, took a dive, and that has supported a number of forex majors rise against it, with the euro reaching an April 2018 high at 123, which is, if broken, likely to validate the move to 125.50 as we have been expecting for a while. Now, in the UK, as I said before, the pound didn't really take advantage of this weakness on the dollar. It fell as the new strain of the coronavirus cases is creating a lot of fears, despite the fact that we've had actually the rollout of the AstraZeneca vaccination yesterday in the UK. We're going to start with the euro dollar first, then the dollar against the yen, which remains somewhat volatile, I would say, but still, since they're both safe havens at the moment, it remained quite unchanged for the first trading session of the year. And then GBPUSD, where we're heading and what actually happened yesterday in the markets. So on euro dollar, if you recall a few days back or last year, I called this as an ABC, right? An expanded flat over here, or a running flat it could be. Well, we didn't get to B just yet, right? So it could be a case where this is A, B, and a C. This is, of course, a triple zigzag over here, yeah, with wave Z, either done or is going to be done a little bit higher. I would prefer to see that actually being the case, because we didn't get the 123.30 yet, okay? I want this to be taken out. And then move all the way down to, well, perhaps the 122 or lower down to 120.34. And from there, we can start looking for some sort of validation signal on the MACD and RSI to start buying the dips pretty much for the last upside move above 125. Okay, this is of course one of the scenarios. The other scenario is that, well, this is a wave 3, this is a wave 4 down here, yeah, and then this is some sort of ending diagonal, okay, in wave 5 over here, which means this would be the end instead, and this is then a move to the downside. But I'm not really a fan of this scenario, to be honest, especially taking into consideration dollar weakness and the outlook for the European economy. Dollar yen on the other side, we call this decline as well a few days back. We are waiting for another move to the downside. Yeah, we want to go down to 101.15 ideally. This is wave, the triple zigzag, yes, in wave Y of W, yeah? And from there, we can start looking for prices to move up. Now, we've done this move A. B wave over here, it could be some sort of triangle, yeah? And then 1, 2, in my opinion. This is a multi-structural degree to the downside. It's going to be the impulse, probably the impulse in the downside in wave 3. Then we're going to get a 4, yeah, either sharp or a bit more time lasting than wave 2. Then we're going to end lower down, okay? Now, the other scenario, of course, is that we've done a 1, 2, 3, 4, and 5. We ended here, and this is indeed a reversal. 1, 2, we're going to see 3, 4, and 5. for W ending here actually, and that's just the start of wave X all the way up to around 110. But it's too early, as I said before, taking the criteria for dollar going forward. Now, pound, we call this triple zigzag when it was still a double zigzag. It's actually coming into play quite well. As you can see, we reached the 137 yesterday, a very good handle, and declined since, right? Now, here's the thing. We've done the X over here, and we're going for Z, yeah? This doesn't look like an impulse, obviously, right? To me, it could be an A though, like a leading diagonal. We could get a wave B over here, and then another move to the upside for wave C of Z. Okay. The other scenario I'm looking here is that we've ended this move to the upside. Yeah, this is ABC for a W, the X, and the Y. So that would mean that this is again a bearish impulse on the downside. This is wave 2. We're going to get 3, 4, and 5. This will be wave 1, and then we'll continue lower. Okay, because don't forget, in the cycle degree, I'm still looking for another leg on the downside. Okay, so I think we're going to revisit that on Thursday or Friday. We're going to see how markets are going to unroll until then. So thank you for watching, and we will speak again soon.